Will markets give up all of yesterday's gains? That's coming up on 3 Minutes on Markets and Money. As we talked about yesterday, on Friday, the markets did rally from very oversold levels back to almost even, recovering a lot of that day, but holding support here back to last week's lows. Now, that was a very important kind of a test of that bottom. And so we kind of started setting up this idea of a double bottom here. Now this morning though, unfortunately, futures are pointing lower. Snapchat reported earnings yesterday, really missing earnings and estimates. That's kind of weighing on some of the big FANG stocks this morning like Facebook/Meta. And that's beginning to kind of drag down the S&P. But one of the commonalities of this market over the last several weeks has been that these rallies that we get are immediately sold into. And every time we get these rallies of any sort, they immediately get sold off. And this has really been the heart of this pressure and really what's been dragging down this 20-day moving average in particular at a very accelerated pace. The decline in prices is also what's keeping the MACD signal, our trading signal now, on the sell signal and getting very oversold and extended here. The elongation of that MACD signal is also kind of unusual at this point. Now, yesterday's rally did not trigger that buy signal. We were close. Didn't actually happen. Market set to open this morning down about 1%. That's going to keep that trigger from happening as well. The important thing here will be, of course, that the market doesn't give up all of yesterday's gains and we break down to new lows. If we do that, we do have lower lows ahead, and that's going to be one of the more challenging aspects to the markets. And I'm not saying that that can't happen, but markets are so deeply oversold here on multiple levels, we should continue to expect some type of at least intermediate term rally that would give investors a little bit better positioning to rebalance risk in portfolios. There's so much negative sentiment in the market. If you take a look at headlines right now, 8,200 or more articles now written on the coming recession of the bear markets. Market participants generally don't predict recessions and bear markets. They tend to happen when they least expect it. And what will happen here, of course, is if markets do get a rally of some magnitude, then, of course, media headlines will immediately switch to say that, well, the bear market bottom is in, the bear market's over, the Fed engineered a soft landing economically. That's going to be the point to where the markets can actually start to drop into a bear market and a recession can occur, because markets tend to do the opposite of whatever the majority of experts expect to happen, because that's just the way market environments work. Markets tend to have these rallies on the way down. And again, while markets can indeed go lower here, and there's certainly an expectation that we could see lower levels on the S&P later on this year, it's unlikely to occur all at one time. Now, the markets could absolutely crash. We saw this back in 2007. The Lehman moment occurred. We had a major financial disruption. Markets plunged very quickly after that announcement of the Lehman bankruptcy. Right now, we don't know who the next Lehman is, and there's not a lot of stress in credit markets either. Taking a look at credit spreads between B-rated bonds and A-rated bonds, that spread is rising, but it's not reached levels that are normally more indicative of financial crisis type issues. And of course, if that would occur, I would expect the Fed to immediately be reversing course. And because this market decline has been so controlled here right now, it's giving the Fed room to operate here in terms of raising rates, which will add to the potential drag on the economy going forward, disinflationary pressures, etc. But right now, keep a watch on markets here. Be careful not to be selling into this. There's a lot of negative sentiment here. Again, market's very oversold. We'll use rallies as you get them to rebalance risk. We'll see what happens today. I'll report back to you tomorrow. And of course, we'll figure out where to go to next. That's 3 Minutes on Markets and Money. See you back here tomorrow.